All right. Hey, everyone. Welcome to another Greenbridge Investing Market Analysis. This is a live stream, so thank you for joining me. In this session, I'm going to be talking about this Bitcoin move and how it should be leading the altcoins, but we're seeing sort of a mixed picture in terms of those altcoins. And that's why it's so important to not get too overexposed to that space, because if this thing fakes out, you're going to see a lot of red, okay? And that's why we want to avoid that type of situation. But at the same time, this thing may be building the momentum that it needs to clear that 12.4 resistance. So we're going to talk about that. Also, I'm going to go over the S&P and the Nasdaq, because again, they're acting a little strange. And then, of course, stocks that you want to see. So if you have a stock or a market that you would like analyzed, just put it in the chat right now. So when I get to it, when I'm done, and I'm going to make my analysis quick because, I know I spend a lot more time answering questions, and I want to make sure I can get to everyone's questions. All right, so with that being said, it's for educational purposes only. For investment advice, please consult a licensed investment advisor. Now, today is Monday. I don't have the economic calendar up, but one thing I can tell you is, hey, Michael, and hey, DJ, one thing I can tell you guys is that Friday is the first Friday of the month, and that's usually NFP. Okay, so again, I don't have the calendar up because I had to get this together here real quick, but if you check any economic calendar, which would be a good idea to do, that's probably the most important economic report that we see each month, non-farm payrolls. All right, there's usually some unemployment reports before that, like ADP nonsense, whatever, but that stuff doesn't really it's not NFP, okay? People like to make a big drama out of that stuff. It's not NFP. NFP is the number. So that's usually Friday at 8:30 a.m. Eastern time. Now, that's important because we want to be aware of that, especially with our Forex trades. Now, we're looking at gold as a potential long, and I'm considering a situation with the euro, and we're going to talk about those things here. So we want to be aware of any economic news that can affect the US dollar. All right, so with that being said, hey guys, hey Ankit, hey Erzo, thanks for joining me. So with that being said, let's get into Bitcoin. Let's talk about what's going on here, and I want to compare this to a couple of altcoins, okay? So first things first, we had the buy signal go off. Again, by the way, you guys, if you have any stocks or markets you'd like to see, put the symbols in the chat now. So when I finish my analysis, I can get to your symbols. Okay, now, we are still inside of this resistance zone, right? And it's been problematic, as you guys know. So, and I know, Michael, you had another one. You had, what was it, AWK or something like that? You could share that in the channel here as well, so I can cover that. So 11.6 to 12.300, this resistance zone is still in play. Now, we had two buy signals going into this. We had one back here, which we managed to avoid using a limit order and a stop order that never got filled. And then we got another one, which activated, I think, what was yesterday at 6.55, okay? So that's, if you notice, that's how we adjust the orders and we fool around with the orders so that the market has to work to get us in. We didn't sit there and react to it. The market had to work, okay? So now here we are, nice bullish candle, but today we're getting this little spinning top. So this is not a bearish situation, not yet anyway, but we have to keep an eye on it, because often when you get a breakout leg or something like that, usually the candles follow through. Now we could look back here and you can see, like, yeah, we have room for a little doji type of thing, but the next couple of candles need to be green, okay? They need to be green, and that will give us a sign that momentum is continuing, especially if we clear that 11,850 area. All right, and that's basically like up in this area here, this high right here. What is that? 11.8, 880s. We need to clear it. And right, and that's why I want to compare, Michael, I want to compare to some of these alts, because if Bitcoin fails, Ethereum's going nowhere. Okay, so that's the important point to take away from this, is it looks great right now, and there's a number of alts that look pretty good and that look like they're outperforming. But if this thing can't continue, then we're probably going to see them stop and reverse, right? So we need to see this. We need to see some follow through. So if we don't get it today, that's okay. But we need to see it as the week unfolds. Now, if we can clear that 11.8 or 11.850, and we start pushing into these 12s, and we clear that 12.4, we're probably going to be building up that bearish, that short squeeze from all the bears that keep shorting this thing, and you're going to see that breakout follow through. Okay, now in that scenario, we should see all the alts or most of those alts follow through as well. So let's do a little comparison here. Let's pull up Ethereum, okay? Because Ethereum, look at this. So Ethereum looks pretty good. This is annoying, right? Because I called that swing trade. What here? Look, I'll show you the swing trade. I still have it here on the chart. Is it on this one? No. Let me pull up my Ethereum chart with the swing trade information on it. It must be this one. Let me see. Is it this one? No, where is it? Hold on. Let me find that because I want you guys to see that. The thing got stopped out. Oh, it's this one. Thing got stopped out, right? Is it this one? Man, I can't find it. Where is it? It got stopped out and it turned right around and it actually went to its first target. Is it this one? I should see it on the chart right away. There it is. Okay. So the original buy was at 406, right? That was back here when Bitcoin also gave that buy signal, which we managed to avoid. Then we got this red candle. My stop was too tight. Okay, I mean, that's looking back, it's easy to say my stop was too tight, but I didn't want to take any chances that this thing broke the support and really started getting hammered. Now, what we did not do is get back in, okay? In those situations, now when Bitcoin was starting to turn, I mentioned to people that, you know, you can use Bitcoin as a guide if you want to choose Ethereum instead. And I also mentioned, in fact, I think it wasn't the video before this, but it was the one before that one. It was like 2 videos ago. I said these targets still stand, okay? They're still good. And we reached 438 today, target 1. So if you're in this thing, hopefully you reduced some risk. And the current candle looks great. There's no spinning top. There's no indecisiveness. But my point is this. If Bitcoin fails to break, right, you're going to be stuck right here at this resistance, which is what? 443, so that 440 area. And I wouldn't be surprised to see it, you know, develop into a double top if Bitcoin fails. What you need to understand is Bitcoin is the leader, okay? And whatever Bitcoin chooses to do, these things typically will follow. And that's many novice traders may not realize that, and they may think like, oh, Ethereum's on its own. It's not exactly on its own yet. All right. So now let's take a look at some other of these coins that I was noticing. Like let's take a look at Litecoin. Right? I mean, Litecoin has a good start, but you see it's kind of hesitating. Nothing to do here with this. If you're in Litecoin, you just let Bitcoin do its job, and this thing should follow, okay? And just like Ethereum, they should follow. But as you can see, this one is not as good looking as Ethereum with that red candle today. We really shouldn't be seeing that. So we need to see, again, follow through. And you need to kind of use Bitcoin as your guide and not be scared out by something like this. Now let's take a look at some of these other weird ones. Like let's take a look at Link. I was looking at Coinbase and I was looking at like the list. There's all these coins. There's so many coins on there that you can't trade on Coinbase, but they list them anyway. And it's like, what is going on here? There's just a lot of junk out there. So here's Link, right? Same situation with Link. It's trying, but if Bitcoin doesn't go, this is not going to go. We missed the breakout. The breakout was over here around this 15.5 area, but this thing is in play, and I really believe that this thing can reach 25. I have another chart with the inflection points on it. Here, let me pull that one up. Where's my Link USD chart? Here it is. So if you look here, I have the inflection points on this chart, and I have a projection up here at 25. So if this consolidation holds and we do not take out this low of basically what, 1280 area, if we do not take that out, we just fool around between 18 and 12 and this thing eventually breaks out, I think, you know, over maybe a week or two, especially if Bitcoin rallies, this thing, you know, the next inflection point for it is 25, which, and I said in a previous analysis I wrote out for TradingView, you want to distribute your targets between that breakout, that 20 breakout, and that 25 inflection point. Don't sit there and say, oh, I'm just going to get out at 25 or it's going to go to 30 or whatever. You want to reduce your risk while you have the opportunity. All right, so I just wanted to point a couple of those out. Also, another one is ZRX. This one, I mean, take a look, right? See how it's hesitating? It looks very similar to Link. It's like, where's the party? So then there was other ones like, what's that one? Wabi. Take a look at Wabi, right? We haven't talked about this one in a long time, right? Look at this. Wow, where did that come from? So you have all these weird coins, and they're all starting to do their thing like that, but you can't chase these. Just let them do what they have to do and use Bitcoin as your guide. OMG, where is everyone? I thought this thing was going to 20. Where's the party now? So, that's why I'm saying it's a little mixed. If you look at, there was another one, not Theta. There was another one that we normally look at. Hold on, let me have it here on my list. And I want to show you, because I was noticing some of these numbers here. Was it like, I think it was Tron, IOTA. Hold on, well, I mean, look at Tron, right? Look at this. See, this is another one. Look at that nice breakout. Looks kind of like Ethereum. All right, but they are not, this will not follow through if Bitcoin does not follow through. So I wanted to point that out. I mean, look, BAT is kind of hanging in there. So just a couple to point out there. Now let me see if I have any altcoin questions. By the way, if you guys are new to Greenbridge, I know many of you are regulars here, so you guys can ignore this message. But if you're new to Greenbridge, make sure you check out our website at greenbridgeinvesting.com, and make sure you register for this YouTube channel. And also, if you like my video, please send me a like. Let me know that I'm doing a good job here. Okay, so let's move on here to, so that's my Bitcoin story. Let's move on real quick to the Nasdaq and the S&P. All right, I'm not going to spend a whole lot of time on this, but I want to point out, because I mean, this story just hasn't changed. All right, we talked about this on Friday, on my video on Friday. I said this thing is setting up for a long. Here's the long, right? It's breaking out, whatever, nice strong candle right into those all-time highs. I'm sure all the news outlets are making a big deal out of this. So, but that could be like Tesla and Apple, right? Because they had their splits. Tesla's like $400 and something, up like 40 points today, which is ridiculous. But I can tell you one thing, that is most likely a lot of day traders all over that, because that's a relatively cheap stock for a lot of day traders. And that's a 40-point move on a $400 stock is an amazing move that's a great day trader day, okay, if you catch a piece of that. Now, look at the S&P. So I just pointed out the Nasdaq, super strong. The S&P giving us a indecisive spinning top, okay? Now, we've seen these before. It's not like this is the peak, blah, 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 because, we're not going to know that the peak is in until after the sell-off starts selling. That's what you need to understand about these type of situations here. You're not going to catch the peak. We tried a couple of shorts, as you know, like with the Qs, and I talked about that in the webinar yesterday, and many of you guys were there. And, using options in that type of situation can help, because if this thing fools around a bit, at least we collect some time value. Even if we're wrong, we can get out for a reduced loss, or we can roll it to the next week or the next month and buy some more time, or get, basically gain some more time to let the market go in our favor. Okay. But I know with the Qs, we still even had a problem with that because they just refused to turn. All right. But that was an aggressive trade. My point is this: Nasdaq is super strong. S&P is giving us this indecisive candle, and that is not that is unusual. So this could be maybe the beginning of a potential peak. We're going into a time of year where usually there's a tendency for it to be bearish. So something to keep in mind, and we're finishing out this month at the high. We're also going into the U.S. election. We're getting closer and closer to it. So I would anticipate that there will probably be some uncertainty going into that, which will most likely or potentially be a catalyst for that pullback. But we can't, here's one thing too, we can't go into this with any solid opinions. I have no opinions. So the market wants to go higher, okay, great. At this point, even though this could be a peak, there's no evidence that says it's a peak. We haven't even taken out any previous day's lows. We haven't even done that. So, in this environment, it's best to keep reducing risk, take profits, like stocks like, I know Hamid mentioned Fizz, stocks like Fizz. Make sure you've locked in a decent amount of profit, and also it's wise to hold on to some sort of position to see how much further the market wants to go. There's nothing wrong with trying to let a winner run. We're never going to get the top, okay? And we're never going to get the bottom. So as long as you're reducing risk along the way, you're locking in profits, and there'll be those times when you'll be glad that you took the money while you could, because these markets don't keep going like this and going like this, although it seems like that's what it wants to do. There has to be a turning point at some point. And I'm not talking about going into a bear market. I'm just talking about a healthy pullback, which this market has been way, it's way overbought, but there's just no selling activity yet. All right. Just want to mention those two. Also, and if you have any questions about that, let me know. I want to pull up gold, XAU, USD, because gold looks like it's got something going on here, and we would like to get back into this. We may send this one out today, okay, the CFD for gold. Now, why? I talked about gold in my previous video, and I said that, we may see that E leg that would, basically give us one more leg lower before we turn, but it was also possible that we don't see that fifth leg lower. And, so it looks like it's trying to break out a little earlier than we were expecting there. So, you have this consolidation. You have an inside bar. Obviously, the consolidation is one broad higher low. We know gold is strong. We know gold is fundamentally strong. It's a good thing we got stopped out of that Canadian, because you see how much lower that thing is, right? That's why stops are good for you. But I bring that up because the weak dollar is obviously going to help this out further. We have an inside bar, and it's basically messing around that high of the inside bar. Today's high on gold on this thing is 1976. Right? Yesterday's high was 1973, and we're fooling around right now at 69. So this candle needs to follow through further, but we may send something out on this. Okay? Now this is it's tough to take pain on this sometimes, especially, with the CFDs, the contract sizes are a little big. So, the stop is going to have to be somewhere below this low. That's a good 70 points. That sucks, to lose on something that's generally strong. So I don't know. That's why we're going to have to think about that. If we're going to send something like that out, we may have to use a tighter stop, although the tighter stop would not make sense structurally. All right. Structurally, the stop needs to be around there, but that's a lot of risk. Okay. So, so we're going to have to consider that further. And also I want to see how this thing acts near the close of the day. All right. So that's gold. Also euro. Michael, you mentioned something about the euro. Euro double top, failed high zone. Yes, that is correct. But the thing is, the euro is trying to break out of this consolidation, right? Just like we saw with that gold trying to break out. They're responding to the dollar. They're both against the dollar. And yes, this could turn into a failed high. But the thing is, this trend is pretty solid, pretty strong. In this type of situation, I'm not really interested in buying the breakout, because it can just pull back again, like you said, the failed high situation. But the next higher low, I would be interested in trying to buy that, okay, and look to see if we can break out further. Now, we may not get that. If this thing follows through, it'll just keep going if it breaks out, and we'll miss it, okay. But if we could get another little pullback, even a tiny pullback with an inside bar, I'd be open to that, because this thing is just not pulling back. And if it's got another leg in it, okay, we'll give it a try. So we're keeping this on the radar as a long, just not at this high. So I just wanted to mention that. That's pretty much the ones I wanted to cover. So let me get into what you guys have now. All right, so let's say AWK, Michael. Michael's bringing up AWK. And let's see, what is this? American Water, okay, American Water Works. And so there's going to be a lot of stocks in this situation, especially with the Nasdaq looking like that, and the S&P. Even though we got that doji type of candle, there's really nothing bearish about it. So we're going to see a lot of stocks that are probably in bullish configurations. Look at this inflection point. So 134 is basically your support that's in play right now. You have a higher low trying to establish itself. Today didn't really progress much, right? You got that red candle today, it looks like. But previous day, on Friday, you got that pin bar, right? And this broader structure is a higher low. So this isn't a bad candidate, Michael, for a long. You're coming from a bullish structure. There's nothing bearish about this. What's the potential and what's the risk? So your risk is going to probably have to be measured by this pin bar low, and that's 138.94. So you figure 138 and a half, something like that is where the stop would have to be placed. And now we're assuming, you know, buying it here, you probably, I bet you get a better price tomorrow, okay, if this thing fools around a bit. So, which would be for a better reward risk. Now, as far as targets, let's see, what's this high over here? 150, and you're fooling around basically 140-ish, right? That's where you're fooling around. What's this thing at today? Closed at 141.29. So yeah, you would want to at least put a target somewhere in the middle. All right, 146. So you're looking at maybe 3-4 points, something like that. Maybe a second target in a breakout attempt. So around that 150 area, and then maybe one higher to see if you can capture some of a breakout if it breaks out. Of course, the market's going to have to keep going higher, which it looks like it wants to do. But if there's any turn between now and this thing doing its job, then you know you have to be prepared to adjust. But nice, I like the setup. I like the structure. I like the situation here. This is definitely something that you know you have a lot of bullish factors in your favor. All right, you just have to be. And I don't want to scare people out, or I don't want people to be unsure of the stock market. It's just you need to be prepared to make adjustments if the stock market turns. That's all I'm saying. Okay, so nice one, Michael. I like it. Okay, so we took a look at Ethereum. We took a look at that Ethereum real quick. All right, Hamid, is a good place to add my position in DBX. Okay, so is DBX a stock? Let's see. DBX. And by the way, all you guys that came to the webinar yesterday, thank you. Thank you for your participation. I hope you guys found that. I was trying to really make it so that you guys could understand, and it's hard. It's really hard to teach options in a simple way, you know, in a way that you can be like, oh, okay, that's easy. It's really not that easy to do. So, you know, I'm still trying to think of other ways to present option ideas in ways that you can take away and be like, oh, okay, I get it now. Okay, anyway, so, but I hope you found it useful. So, Hamid, Dropbox. Oh, yeah, okay, I know Dropbox. So Hamid's question is it a good place to add my position, to add to your position? Well, okay, and I'll tell you right now, Hamid, based on what I see here, I would say no, and here's why. You're near the middle of, see this range? I drew this range. You have this range low to this range high. You can draw a box around it very easily. Also, you have some price action that even dates back to here. You know, obviously there's some reaction to this price action back here at this $23 area. All right, you're right now, this thing is fooling around near the middle of that range. So what is that? That's around 21 and a half. So if you were going to add to it, this is a tough spot because this can go either way. The middle of the range is a very random place. So if you're going to add, you're better off doing it near the range low. Okay, somewhere around there. So if this thing would be nice enough to pull back a bit, you know, around around the $20 area, that would probably be a more ideal place. I mean, you can add to it here, but my point is it may go higher, it may not. Like, it's just 50-50 here. You know, at least if you buy near that range low, probability is more in your favor. Okay, of course, if you're buying when you're getting a bullish candle, some sort of bullish reversal near that range low, you don't want to buy a bearish candle and then next day it just opens and closes bearish again, right? You just got caught in the bearish breakout in that situation. So, I mean, that's your ideal price. Market may not deliver that, you know, it may, but with the market in the position that it's in, I'm anticipating, you know, we've been anticipating that pullback, and it's just going to come out of nowhere. You know, I've been talking about it the whole month of August, and you know, it hasn't occurred yet, but it'll come out of nowhere. And in those situations, we're going to see good prices all over the place, and that might be one good price. So one thing you could do in this type of situation, Hamid, if you want to add, maybe what you do is the size that you would normally add, you know, let's say normally you'd add 100 shares, you know, you add something like 30 shares, you know, and if it starts to pull back, then perhaps you add the rest of it at the better price. So at least you got a little piece of it, and, you know, it starts to go your way. Hey, you got a little piece of it, at least. It's better than nothing. But by doing that, you're compensating for that risk, that random risk. And if it goes to the range high, hey, you get that little extra piece, and that's a little extra profit that you can take out. So it's better than nothing. That's the way you have to look at that. Because again, that's a more conservative view and more of a capital preservation type of view, rather than, you know, aggressive, hey, throw everything in there and hope for the best, which, you know, can get you into a lot of trouble, especially since we're not at a market low. All right, so that's DBX. Thank you for bringing that up. All right, Ankit, can you show once how to use a fib extension? Okay, sure. So here we could use. Let's see, should I use this one, or you know what? Maybe I'll use the Nasdaq as a better example, because the Nasdaq we could get some useful numbers out of the Nasdaq since there's plenty of structure to work with. When you're using an extension, you go to the extension tool here, okay, and you basically you have to find 3 points. Now, when you're measuring these, there are different magnitudes, so you have to keep that in mind. The smaller the magnitude that you measure, the lower the lower the reliability. So I'm gonna start measuring the largest magnitude. You could measure multiple magnitudes and then compare the results. So I'm gonna compare this low. We'll start with this low, and we'll measure into this. This can be very subjective, So we'll measure into this point here, because this pretty much is where this swing. Pretty much there's a more complex structure there. As you can see, it kind of popped up and gave us that little triangle formation. You have little ones along the way, but you can see this one's larger, right? So I'll use that one as my reference point. Now, if you notice, I get, I pull back to my third point, and I get all these numbers, right? I'm only interested in like the 1618, the 2618, and those are now projection points based on this move. All it means is, this 1.60%, it's just 1.5% greater than from the low to the high, from the 1 point. See where it says number one, the 1 point? The 1 point is basically from this low to where I measured it would be a whole, basically it would be equal, right? It would be equal. So if the Nasdaq goes to 14,750, then that move would be basically equidistant from this low to this low. So the 1618 is 1.60% higher than that. All right, and those tend to be inflection points. So, why they work, I think it's a psychological thing, but it's also the proportions of the market. There's a tendency for markets they just react around those numbers, right? And obviously, I think it's an emotional thing. I think that's where, for whatever reason, the emotions change. Okay, without getting too far out here. Anyway, that's how you draw. That's how you draw a extension. Like I said, you can draw them many different magnitudes. So best thing to do is start with the larger ones. Don't get caught up with the smaller ones, because if you don't understand the difference, they're going to become very confusing. All right, so Ankit, I hope that answers your question. Okay. Oh, Urzo, I managed to take the link breakout. Nice, Urzo. Nice. That's great. So just at this point, you have to just try to let that thing run, and see how far it goes. If Bitcoin goes with you, you should be good. All right. So Hamid, could you please give your opinion about TVTY? Sure, let's do that. TVTY. Tivity Health. Okay. So first thing I'm looking for are inflection points, right? It's the first thing I want to see. So we have this one. Some of them may not even be in play. We have this one. We have one over here. That's a minor one. And we have a gap, right? We have this gap over here. The general structure here is bullish, higher lows, higher highs. That's okay. but it's coming from something bearish. Let's see what the bearish situation is. Let's look back a little further and see what's going on here. So yeah, all right. So this is, although you have some, the momentum has changed recently, you do have some structures up in here that can be problematic going higher, especially this right here. So also this right now is giving you a lower high. This is a lower high relative to this high. It's tried to fill this gap here, which is good. This gap, tried to fill that, okay, didn't complete it. So what I have to say about this, just based on that structure, there's two ways to go about this, right? The short-term view and the longer-term view. The short-term view is this bullish structure is still in play because we haven't taken out any supports, okay? So you can go by that bullish structure if you're going to have a short-term point of view. As far as like an investment point of view, I'd be much more careful because this structure can break, especially if the Nasdaq and S&P start turning. Like if we get that broader pullback and we start taking these supports out, like 12.25, then it's probably going to feel some pain. But until that happens, this thing is in a position to go higher. And you do have this gap, which it has not completely closed. You have this area right here, which it can at least try to push into before that gap closes. And you're looking at the low 20s. And you also, what I also like about this in that short-term point of view, what I like about this is you have this nice double bottom situation followed by, this is not exactly the best buy signal, but you do have took out yesterday's high, nice strong close today. So this is definitely, looks like a long signal to me. As far as potential, I would try to get out, if you're going to risk, let's see, low is 1586, so your stop's going to have to be probably around 15.25, something like that. And this thing is right now at 16.5, so you're looking at maybe $1.25 risk. And if that's your initial risk, you should be looking to take profits around $1 right away. Like that would be your first target, $1 higher. So maybe in the low 17s, and then you have to see if the thing can run further, which would justify your reward risk if it can take out this high, all right, this high of 1790. If you buy into something like this and it's not taking out that high, you should reduce your risk further. But with this higher low and the way this structure looks, this short-term structure, in theory, it should take out that high, okay? That's what it should do. So now you know what your risk is. You know where you should at least reduce some of your position, reduce some of the risk, in case it doesn't break, and then you have to wait and see if it breaks. That's where you make those judgments. You have to ask, like if it's pushing up there and it's giving you a hard time, it shouldn't give you a hard time. It should just go. If the Nasdaq is pulling back big and the S&P is, if you're caught in that type of situation, I would anticipate that this thing would be pushing supports instead. And that's where you'd have the cue to get out of the position completely, take a stop before your stop is reached, or reduce risk or something, okay? Like reduce the position and see if the smaller position gets stopped out, and if it doesn't, you get back in. You have to make those type of adjustments. It's very hard for us to send that type of information out when things, especially when they're happening fast, okay? But good short-term structure anyway. I think it's a nice swing trade candidate. Thank you for bringing this one up. Maybe we'll call this one tomorrow. So I'll go over this one with Andrew. Thank you, Hamid. So I hope that helps. Ankit, I think you showed once and I forgot. You applied 3 points in getting an estimation. Right. So Ankit, and that's as far as a extension, that's pretty much what they are. They are potential inflection points and they can be useful for targets, but of course, there's no guarantee with those. So they give you kind of a point of reference where you should be reducing risk and where you should be looking for opposite of price action. So obviously if you're looking at a long, right, you're anticipating selling activity in that area, and maybe you don't get it, maybe it blows through, but if you see selling activity, at least you're prepared. Okay, Ankit, check out YFI USD. It made history before BTC. Okay, YFI USD, what is that? YFI USD. This is one of those, what is that? YFI, I'm not familiar with this. It's on Binance. Okay. Look at this move. It's at 3,600. Is that right? 36,000? Things at 40,000. This is one of those. I mean, who's trading this thing? Where did this, like, what's the story behind this? Low 34.14. This is crazy, and it's at it went to 40,000. That's pretty crazy. There must be like what 100 coins available. There must be a float of like 100 coins or something. I mean, what is this? That's. I mean, I wouldn't obviously. You know, you can't. This just like anything else. Just like anything else, right? This is the herd mentality. And you can't sit there and chase it, obviously. Just like OMG, just like Neo looks, just like all of them look. It'll pull back. In a situation like this, you know, there's no inflection points to work with, and there's no history either. So the only thing you can go by is that, which is not, you know, not likely to pull all the way back there. Although anything is possible, I would look for a higher low. This is where Elliott wave can be very helpful, because this, what you're looking at here, this type of move is a typical impulse wave, right? In Elliott wave terminology, you have 1, 2, 3, 4, and I'd count 5 waves. And you know, when you can count 5 waves, usually the party's over, all right? So that's a broad wave 1, and now you need a broad wave 2. So broad wave 2 can pull all the way back to the high of wave 3 over here, 16,000. The 16/8, right? It can do it, and most likely wave 2 is a consolidation, range bound triangle type of formation. So that's what I'd be looking at, you know, for something like this. But that's nuts. Okay, 29K available. See, that makes sense. Something like this, when you see a really high number, like, you know, 40,000, it means there's a low float, obviously. Okay, so cool. Thank you for bringing that one up. Let's see. The high of UFO today was right. Yeah, that's that again. Like I said, the herd mentality. No different than Tezos. You know, a $3 altcoin running to $4, or what's that? NNR. What was that one? NMR USD. The same idea, right? Look at this thing. Remember how crazy it was when it first came to Coinbase, right? Here's the Coinbase chart, and this thing ran to like $40, and now you can get this thing for, well, I'm sorry, not $40. What's the high there? $68. Okay, and the low after that was $48. So you can see they don't go, they get crazy, and then, you know, it's the herd mentality. So now you can get it at a much better price. I don't know. I don't like this chart at all, by the way. You know, NMRs. I was looking them up. They're a hedge fund that actually bet on stock market moves or something like that. And if you bet correctly, they reward you more NMR tokens or some strange thing like that. I don't know. That's all I could say about that is I don't know. Okay, what happens if the stock market gets hammered? Are they going to be short the you know, the S&P and the Nasdaq, and is this thing going to still appreciate in value? I don't know. Anyway, thanks for bringing that up. Just wanted to ask, Michael, just wanted to ask. So, yeah, Michael, good question about our old website. We're keeping the website going. It's going to be more of an informational website. It's not going to be like a membership site. You know, Greenbridge took over all that stuff, but we're going to keep the old site going, and it's going to be, our developers rebuilt it. So they just haven't, I don't think they put it up yet. But it's also, they're changing the server and everything else, so it's not going to be as slow. It's like ridiculously slow. So it's not going to be like that anymore. So I'm expecting the next day or two, the new version should be up. And it's going to be more article-based, you know, and all that kind of stuff. And it's going to obviously focus on Bitcoin and the altcoins. And it's going to be more like technical analysis and fundamental analysis. And it's going to be free. It's not going to be a membership site or a pay site. Okay, so thanks for bringing that up. By the way, if you're new to Greenbridge, it reminds me, make sure you check out our website at greenbridgeinvesting.com. We are a signal provider, right? Swing trade signals by text, by email. We also have a portfolio management ideas and a chat room where we're sharing market insight and perspective each day. Plus, we have other educational content like the webinars, like the one yesterday, which is now in our web. Well, I didn't put it in the webinar library yet, but you could see it here on this YouTube channel. But we have a whole collection of them in our webinar library, which you could check out. And if you like this channel, please subscribe and press the like button. Let me know that you like what I'm doing here. Okay, so let's see what else we got here. Henry, what are your thoughts on G-Pro? I'm thinking of a call option with a $4 strike. Okay, well, that's nice in line with the options webinar that I put together yesterday. Henry, let's take a look. G-Pro. By the way, tomorrow is our podcast. We usually do the podcast on Mondays, but we changed to Tuesdays. Okay, so tomorrow at this time, for basically 4 o'clock Eastern time, we will be streaming our podcast, the Talking Markets Show, and Andrew will be back on it this time, and Henry, and we'll have some cool things to talk about there. Okay, so make sure you guys check that out. I'll put the link in the chat room once I have all that stuff set up. All right, so GoPro. Oh yeah. All right, this one is a good candidate for a market pullback. DJ, if you're there, this would go on the list of potential stocks. I had CSGS. Turns out there's no options for CSGS. But this one has options. Here's what I like about it as far as a short. You have lower highs, okay? You have this head and shoulders. Now, I've talked about how head and shoulders could be very misleading in a bullish situation. But here's why I would like this as a bearish candidate. For one, you had the recovery, recent recovery, right, off of April, which is obviously that's the structure that's still in play. But the Nasdaq is pushing all-time highs, and this thing is not. So I'm going to take that as a hint. And, this thing is not only not pushing highs at all, it's about to break supports. This is not what a strong stock should be doing, pushing supports. So now, Henry, you said you're thinking of a call option with a $4 strike. So let's think about that here for a minute. So a $4 strike, and you're looking at how much time on that? January. So that's a lot of time value. All right. So let's go to $4. $4 is around here. So you're thinking about buying a call. So basically, buying a $4 call option, it's almost like, since you're deep in the money like that and you have so much time, it's basically an alternative to buying the stock outright. Okay, you're going to have a pretty high delta on it. It's probably, I don't know what the delta is, but it's probably going to be like 75 cents or 80 cents or something like that, which means for every dollar that this thing goes your way, you're going to be making, your option will appreciate by 80 cents. And obviously, if it goes against you, that's how much you're going to be losing as well. It's a nice limited risk way to play this thing, but the structure, I would hold off on buying that call until this structure improves, because why watch that time value decay over the next couple of months, especially, Henry, if we're going into a very uncertain time over the next couple of months with the election coming. If the Nasdaq and S&P give us that broad pullback that we've been waiting so long for, this is in a position to get hammered. Okay, unlike some of the other stocks that are looking like AMD, for example, pushing highs. What's the other one, like Spotify, and all those, they all look pretty good, right? Like, let me just show you a quick comparison. AMD, which has nothing to do with GoPro, but there's a reason why I'm pointing this out. It's chart structure, right? Look at AMD. Look at this thing. This is ridiculous, right? That's ridiculous. Look, and I'm pointing this out because when we look at GoPro, G-Pro, doesn't look like that, does it? Okay, so this is what I'm pointing out here is it's relatively weak. And you have this resistance over here. What is this resistance? This resistance right there, which it actually reacted to. So yeah, I would actually be looking to buy a put. Okay, DJ asked, we talked about this about a week ago or whatever, earlier in the previous week. He said, what stocks would be good candidates for shorts or buying puts? And this is one. All right, I saw, as soon as I saw the chart, I'm like, oh yeah, short. Anything with these lower highs, I would buy a put. Okay, but I wouldn't buy a January put. I'd buy like, a November put or something. It's going to be less expensive than a January put. And the strike on that, if you look at an out of the money strike, maybe a $4 strike is probably cheap, okay, or cheaper. The closer to the money you get, obviously, it's going to be more expensive. So, but that's how I would answer that question, Henry. If as far as a long goes, is it a bad idea to go for a long? Well, you have this structure which is in your favor, and if the market continues higher and higher, this thing at some point will probably start to play catch up, but there's no setup. At least, if anything, there's no long setup. You have a potential double bottom, but look how this thing closed. That's not how it should close on a double bottom. Now, maybe tomorrow it'll fake out and give you an inside bar. But if this thing breaks lower, takes out today's low of $4.53, I would hold off as far as the long goes. Okay? So just want to point that out there. Thank you for asking. That was a good question. Thank you for asking about that. Okay, Ankit, no problem. Henry, I think there are only 20. Okay, so we're talking about that weird one there, that YFI. For your information, Henry, thank you, and yeah, it makes a lot of sense. I like the put idea in context with how, right, so that's an issue of relative strength or relative weakness, and this thing is definitely acting relatively weak. So, another one that's on that list is the IWM, which is the Russell 2000, right? I mean, look at this thing, relatively weak. Nasdaq's making new highs, and this thing is doing this. So, and this would be another candidate, but we don't want to jump into this stuff too early either, because we tried that with the short calls on the Nasdaq, and that didn't work out very well. So, but the relative weakness here is pretty clear. This is the March peak, and we're nowhere near it. Meanwhile, the Nasdaq and even the S&P blew through that March peak. Okay, and this thing is still struggling. Not a good sign for the small caps. So another candidate for a long put. At least you don't want to buy 1 month out. Usually when you buy options, you need to buy yourself some time, because the shorter the time that you buy, the faster the decay. So usually you want to give yourself at least 2 months for something like that. And if it doesn't work out, doesn't mean you're going to hold it all 2 months. I mean, it just means that you have the time. And if it gives you a hard time, you get out of it, you take a loss, but you don't have to lose the entire premium, because you can exit earlier and get whatever premium back you can for it, right? That's one way to go. We're not a big fan of long options, but in this situation, they make sense because they limit your risk. You're buying puts, and if it doesn't work out, the max you can lose is whatever you pay for that put if the market just goes higher forever. But if that market pulls back, those puts have a good chance of inflating dramatically. Because remember, when the market pulls back, there's something called implied volatility, which is basically like inflation, and the value of the option will be worth a lot more than the theoretical value, and that's usually, you want to be in before that, okay, not after it, because then you're just buying or selling. You want to sell hot air, you don't want to buy it. All right, that's basically what it is. That's why when you get those inflated options, they're great for selling puts or selling calls, because you're getting something, and when that hot air comes out of it, it comes out fast. Okay, so I know those aren't the most technical terms for options, but it's the best way I can explain it. All right, so right, oh great, cool, Michael. All right, so do I have any more questions? Let's see, how long I've been talking? I've been talking for 2 hours. Let me see. No, almost an hour. Okay, and the stock market's closed. So great questions, everyone. Do I have any other questions about any of these markets that we've gone over here? I love the participation, really. Thank you all for these great questions. Do I have any other questions? By the way, again, if you're new to Greenbridge, make sure you check out our website, greenbridgeinvesting.com. Check out our, we have a 7-day free trial. Okay, so you could sign up, you could try it out. If you don't like it, hey, no problem. And we also have a coupon code. If you come into the chat room and you ask Andrew what the coupon code is, he'll tell you, and you'll get 50% off your first month. All right, so I might as well mention that. And we're going to have our podcast tomorrow, Talking Markets with Mark and Andrew. That's me and him and Henry. And we'll be going over some more perspective and things. What's cool about that show is they bring up things that usually, they tend to bring up more things on the fundamental side, where I focus purely on technical things here on this stream. Okay, so if I don't have any other questions, guys, I'm going to wrap this up. Any other questions? Let me see. I got to everyone's. Cool. So I want to thank you all for joining me, especially Michael. I mean, what time is it over there? What is it, like midnight practically? And and Henry, thank you, and Ankit, and DJ, and everyone else, Hamid, You know, I don't know where everyone is located here, but I know it can't be early, or maybe it is really early. Maybe it's like 1 or 2 a.m. in some of these places. But you know, it's just 4 p.m. here. Stock market's closed, and I'm going to wrap this up. So I want to thank you guys then. Thank you again for joining me, and enjoy the rest of your day, the rest of your evening. Oh, it's almost midnight there where you are, Michael. Wow, you're crazy. But hey, no, that's cool. You're committed. You're not crazy. You're committed, and that's important. It's the only way you're going to learn this, you know, and the only way you're going to build confidence is by absorbing everything that you can. So I always appreciate your great questions. All right, so thank you all. I'll see you all in the chat room tomorrow, and I'll see you all on the podcast when we do that as well. All right, so enjoy the rest of your day, the rest of your evening, and I'll talk to you then. Thank you, everyone.